T.
Turning the mics on. May I have your attention, please? If you have not done so at this time, please silence all cell phones and pagers, and please sign in. Thank you.
Thank you. This meeting of the Louisiana Tax Commission is hereby called to order. This meeting is being held at the offices of the Louisiana Tax Commission at 1051 North 3rd Street, Suite 225, Baton Rouge, Louisiana. The date is Wednesday, July 18th, 2018, and the time is 10:01 a.m. Please call the roll.
Chairman Shahardy.
Here.
Commissioner Wagasback.
Here.
Commissioner West. Commissioner Vercher.
Here.
Commissioner Wood.
Here.
4 present and a quorum.
Thank you. At this time, I will ask anyone who is planning on testifying at the table this morning to please come forward to be sworn in as a witness.
If you haven't done this before, we swear all the witnesses in at the same time. I will administer the oath. If you'll approach any of the microphones, affirm the oath by stating "I do" and state your name for the record. Please raise your right hand. Do you swear or affirm the testimony you're about to give is the truth, the whole truth, and nothing but the truth, so help you God?
I do. Tad Bolton, LTC.
Michael Brown, JAS LLC, and personally.
I do. Brian Pig Reagan, Michoud Boulevard Commerce Center.
Gerald Block, on behalf of the Lafourche Parish Assessor's Office, I do.
Mark Gillespie, LTC, I do.
Russell Almaraz, Orleans Parish Assessor's Office, I do.
Stephen Marshall, KA, I do.
Kevin Kelly, Michoud Boulevard Commerce Center, LLC, I do.
David Tran, Louisiana Property, I do.
Patrick Quinn, I do.
George Wallace, LTC, I do.
Thank you. It is the Tax Commission's policy to accept all documents into the record that were timely pre-filed in accordance with the Commission's rules and regulations. This will be done at the conclusion of all hearings on today's docket. Accordingly, there is no need to formally offer or introduce the exhibits into the record during your appeal hearing. However, if you intend to object to the submission of any of the opposing parties' exhibits, you must notify the Commission at the start of your appeal hearing. As a reminder, this is an administrative hearing, and as such, the rules of evidence are relaxed. The Commission is inclined to review and consider all evidence submitted and to accept such evidence into the record. There being no old business to take up at this time, we'll move on to the appeal docket. The first matter under appeal is the appeal of Suzanne Alavi versus the Orleans Parish Board of Review, docket number 17-22172-010. This is a taxpayer appeal. It does not appear that anyone is here this morning on behalf of the taxpayer property owner. The property owner in the appeal requested a value of $170,100. Again, there being no one here from the on behalf of the taxpayer, I'll go ahead and ask the assessor's office to make their presentation.
Good morning, Commissioners. So the valuation for the property is set at $270,000. That is the value that we have from last year when we had a signed settlement agreement between our office and the taxpayer. It's currently, it was upheld by the Board of Review because it was a settlement last year between the two parties. It's currently less than the Tax Commission Staff Appraiser's recommendation and a lot less than the actual sale of the property. The tax owner sold the property for $390,000, but we're asking to uphold the settlement agreement between our office and the taxpayer at $270,000.
Thank you. Mr. Bolton?
Sir, I personally inspected this property from the exterior, did an appraisal on it, and I came up with $277,000, which is 2.5% less than the board.
275, right?
275.
Yeah.
All right. Well, the tax commission appraisal, 275, upholds the 270
Yeah.
from the assessor's office, and that was a settlement that you had last year with the property owner.
Yes, sir.
Yeah, okay. So,
Mr. Chairman, I'm prepared to make a motion.
please do.
I would move on docket 17-22172-010, that we uphold the parish board review value, set land at $31,100, improvements at $238,900, for a total of $270,000.
Have a second?
Second. Commissioner Vercher?
Yes.
Commissioner Wagasback?
Yes.
Commissioner Wood?
Yes.
Commissioner West is not here. Chairman Shahardi?
Yes. Thank you. All right, the next matter on the docket is the appeal of JAS LLC versus the Orleans Parish Board of Review, docket number 17-22174-014.
Good morning, gentlemen.
Good morning. Just give me 1 second to write this down. All right. All right. Good morning, Mr. Brown.
Good morning, Mr. Shahardi.
you're appearing on behalf of the-
I have the first three appeals. Two of them are
Yes.
under JS and one is under myself.
Under your name, that's
And I
correct.
made my argument in a general argument, and I put the specifics in the package that I gave you.
Okay. Okay, so is that okay with you to make an overview?
Sure, yeah, that's not a problem
And
at all.
then, and then I do need you, though, an overview is fine. What I do need you to do, though, is, with regard to the first appeal, is to give us some specific information.
I've broken down the specific information.
Yeah, but we'll do those one at a time.
Certainly.
And we don't have to repeat the overall discussion.
My first statement.
Yeah, and we'll include that as, in the record as part of, in fact, I'll make that motion. Well, let's let you do it, and we'll include that in the other two
Okay, fine.
appeals as well.
If I may just ask,
Sure.
we have no objection to Mr. Brown presenting any documentation. Just no documentation was submitted to our office, so I would request a copy so I can go through it as we're going through
Sure.
the appeal.
Yeah, do you have a copy? You don't have a
We don't
copy.
have a copy.
Do we have a copy that we can give Ms. Alvarez?
Thank you.
So sorry.
That's fine.
Okay,
Okay, sir. I disagree with the GRM.
and pull your microphone a little bit closer so we can,
I disagree with the GRM method of valuation of the three houses. It's based upon retail sales, which are most probably for single-family purchase. Therefore, it's skewing the value to a much higher level. For income property, the commonly used method by most commercial appraisals would be a capitalized value of the net cash flow. This uses a uses and applications of fund statement, commonly known as a cash flow statement, which doesn't take into consideration depreciation, is the basis of valuation for income property as it is specific to each property. See article by Rick Amon. As it is perhaps the most common, majority of investors apply the income capitalization cap rate method. It further says the cap rate methodology provides a very quick value assessment based solely upon the net operating income. In a comparison of the GRM method, he says, unfortunately, while this method, GRM, is expedient, there are notable flaws in the solely using the GRM method specifically. The property operating expenses are not included in the calculation. This can create a significant variance when viewing two similar properties with varying ages. And while rental income may be reasonable by similar, expenses are traditionally higher at older properties. I'm sorry, I misspelled it, said older. Therefore, the GRM does not adequately represent the true investment value. Article from Bottom Line. The disadvantage of using GRM for evaluating income property, however, is it is based upon the gross income, basically, which means it does not take into account income property's vacancy rate or its operating expenses. See an article. The relevance and application of the gross income multiplier. The disadvantages associated with the use of the gross income are listed below in orders of perceived importance. The GIM method assumes uniformity in properties across similar cases. Practitioners know from experience that expenses ratios among properties within the same class can differ greatly as a result of such factors as deferred maintenance, property age, and quality of property management. The GIM estimates the value based upon gross income and not net operating income. While property is purchased based upon primarily on its net earning power, it is entirely possible that two properties can have the same NOI, although their gross incomes differ by as much as 100%. Thus, a GIM is subject to substantial misuse. A GIM completely fails to account for the remaining economic life of comparable properties. By ignoring the remaining economic life, the practitioner can assign equal value to a new property and a 50-year-old property, assuming they generate equal incomes. C, administrative law court decisions. In the final order, the decision Judge Stephen P. Bates states a fundamental issue in this case is which is the most appropriate method of valuation of a multifamily property. In his findings, in fact, in part, he concludes, because of the multifamily rental use of the subject property, the market sales method of valuation is not practical. The assessor's gross rent multiplier, GRM method of valuation does not provide the most accurate measure of value for the taxpayer's property. Next, the best and most accurate method of valuation of the subject property is a direct capitalization method. Okay, on the first, you want now me to do the specifics for the
Yeah, if you
properties
could
in
get
order?
to
if I
this
can?
first appeal, which is,
Saraparu Street, I believe, isn't it?
Yes.
Okay, you all have
it's
Yes,
Sarapuro,
Saraparu,
Saraparu Street.
I believe.
Yeah,
Pronunciation differs as to what part of town you grew
I
up.
understand. Well, it's your property, so we'll say it any way you want. We'll call it Smith Street if you like.
Okay, thank you. The cash flow statement is pretty much an actual statement for income and expenses and shows a net available for financing of $12,874.22. If you look at at the summary sheet that we have, Saraparu Street in 2015 was $95,000. It's interesting to note that the income capitalization method finds almost the same value of Saraparu Street. That's according to what your appraisers had found. So the value that I found by the capitalization method was $143,046. Well, they raised it to $163,000. So that is that's reasonably close to what it is that they found. In other words, it's not a great, there's not a great difference, but there is enough that we can ask that rather than have the 40% increase, that it could be scaled back from 163 to at least 143,000, which is what the capitalized value is.
All right, on Saraparu, I hope I'm saying it right. You're requesting a value of $143,000. Am I
Yes.
reading this correct?
Well, that's what the capitalized value is.
Now, is that actually what you put on your appeal form, the 143?
Yes, sir.
Okay.
Now, you got 95 on the appeal form.
I'm sorry, I put the old, when I originally filed it, I used what the figure was that was before they had
Okay.
substantially increased it. But when I did the capitalization, it came out to a higher figure. I'm just trying to be honest and open. Am I being wrong?
No,
Should I
our
come up
information,
and jury rig the figures?
our information is representative of the 95,000 as a
Yeah.
taxpayer request. I just wanted to verify that.
I would love it if you did that, but I found that through my calculations that I was incorrect.
Okay.
The market approach, and of course, Mr. Bolton will testify to his value, but his market approach came out at $173,000. His income approach, which was based upon the gross rent multiplier, was 143.5. And you're requesting 143, which is what your calculation comes up to.
Yeah.
Am I correct in my
That's correct.
statements? Okay.
Can't lie about the figures.
I understand. All right.
And the Board of Review reduced it to $158,500. Is that your?
That was last year. That's correct, it was.
Yeah, yes.
The
That
Board
was-
of Review reduced it by, what, $5,000?
I'm not sure what the Board Review reduced it last year. The values, though, the 158,500 was the commission's ruling last year. I don't have the numbers of the Board Review off the top of my head. I
So-
apologize.
That's what it was.
Yeah, the number that's listed here is on the appeal form from the Board of Review says 158.5.
Okay, then I would, I would think that the since that was the ruling of the commission last
Commission.
year, the board review upheld that ruling from last year. So I don't think that they lowered it.
Okay.
I may be mistaken, I'm not
Okay, but
100%
it's lower
sure.
than what y'all originally,
But-
it's
Yes.
lower than the assessment.
Our original value was 163,500, I think,
Yeah.
and then it got
Did you,
low.
the value that's out there for the year under appeal,
Mhm.
which is 2018, the assessor's office had what value?
I believe the assessor's office had rolled that value over
To
from last year,
158?
158,500.
I didn't go look it up. I should have, but I didn't. Okay.
I mean, it was just our position that we just wanted the commission to uphold the ruling from last year. We had no disagreements with the valuation done by the staff appraiser, and I believe, I don't want to misspeak, but I believe the board review upheld those rulings from last year. I could be mistaken, but we did not, to my knowledge, change the values.
So it's your belief that you're that the assessor's office has 158.5
Yes,
as the value for this year,
yes, that's,
for the year under appeal?
yes, sir.
Okay.
Yeah, our records show 163.5.
It
Well,
does.
the appeal
The
says
appeal,
that.
appeal says that. yeah.
Okay.
So, all right. All right, do you have any more questions for Mr. Brown? or- All right. Mr. Alvarez?
We have
Oh,
nothing further to add. That was
okay,
just.
okay.
yeah. Other than, I guess, we feel that the sales comparison approach is a more applicable valuation to property for a single-family residence or even a double. Income-producing properties such as apartment complexes, the income approach to value is more applicable, and that's all.
This
that
is
we
a
have to add.
double, am I correct? This is a double?
Yes, sir.
Yes,
It's
sir.
a double, okay. All right. All right, Mr. Bolton?
My price coming in at 158.5, it's last year, it's the second time.
Were you able to, I know you did the gross rent multiplier.
Yes, I did, it was 100.
Right, 143,000 or something
Right,
like that.
correct.
Were you able
used
to
three
do
big
an actual
values.
income and expense statement?
No, I did not.
Okay. I believe this is one last year. You were late getting here last
I
year.
have to apologize. I had just had bladder surgery.
Yeah, no, I'm not,
And
I'm not,
I had to- I
I'm
had to
just
go to
trying to
the
get my,
bathroom.
but this is one that you did not testify on last
Correct.
year, is that
Correct.
correct?
Correct, and I didn't do as much research
Yeah.
to make the
Okay.
presentation as I did for this
Yeah.
year.
Any other comments by anybody? Okay, give us 1 second.
I'm not sure.
Bill docket number 17-22174-014. I'll make a motion that we set the land at 49,100, the improvements at 93,900, for a total of 143,000.
In light of the new information, I would agree and like to second the motion.
Commissioner Vercher?
Yes.
Commissioner Wagstaff?
Yes.
Commissioner Wood?
Yes.
Commissioner West is not here. Chairman Shardy?
Yes.
next document is
Yeah,
Laurel Street.
let me get my bearings here real quick. All right, the next matter on appeal this morning is the appeal of Michael L. Brown versus the Orleans Parish Board of Review, docket number 17-22176-044. Mr. Brown. And we'll make a motion to incorporate the general argument that Mr. Brown made in his previous appeal and incorporate that into this appeal.
Thank you very
So I'll make that motion.
So moved.
Commissioner Vercher,
Yes.
Commissioner Wackenstack,
Yes.
Commissioner Wood,
Yes.
Commissioner West is absent, Chairman Shahart.
Yes. All right. Go ahead, Mr. Brown.
Yes, sir. In terms of...
Turn the light on.
I think they did that.
I've been in the dark for a long time. Okay,
Paul?
let me just make this one comment about Laurel Street. The 2015
Yeah, again, pull the mic closer to you, please.
I'm sorry, sir. Laurel Street 2015 value was a result of a prior year's increase not brought to the LTC, but the capitalized value is $110,282. This would show an increase for the assessor of over 279%. Okay? What I did in here, and I have actually two cash flow statements. One I did at a 10% vacancy factor, which I think is more normal, although in the last 2 years, I have experienced a 25% vacancy factor. So I did both to show what those two equivalent values would be. And so according to what it is that I asked for, and I think that would be a little more reasonable, would be the, let's see, for Laurel Street, the 10% vacancy would equal a value of $110,282.44. If we were use the actual income produced, it would be a value of $52,282.44.
All right. So you are requesting a value of what?
Of $110,282.44.
110,000?
282.44. Right, so I'm ignoring the 25%
Sure.
vacancy and we're suggesting a 10%. As we had a lot of distractions the last 2 years with this bed and breakfast stuff.
All right.
Looks like the expenses are pretty high on this one. It's, the electric, gas, water, and sewer, that's not passed on to the tenant?
No.
So you pay that, and that's,
And these are the figures that we reported to the IRS.
You're requesting an overall value or an improvement value of 110?
I was requesting of an overall value, but based upon the income, would be $110,282.44.
Okay.
Do you dispute the land value at 127,000?
I didn't calculate that necessarily. It's a very small and narrow lot.
But it is inclusive of, in tabulating the overall value.
It's consistent with the capitalization method. Or if I go to borrow money from a bank, they're not going to loan me any more than what it will support. And that is the true valuation of income-producing property.
They'll loan you money based on what the property is worth, and if the sales income approach is worth more than what you're renting out of property, they'll loan you more than what the income producing could be. Our office would disagree with net operating income capitalization of a single family or duplex, especially since our office wasn't provided with audited financial statements. We haven't been able to reconstruct the income approach to value. No documentation was submitted to our office. I don't think that the audited financial statements were submitted to the staff appraiser as well. This is a lower valuation than what our office feels a fair market value is. We're asking the commission to uphold the commission's ruling from last year, which is upheld by the board of review, and it's, we agree with the staff appraiser's valuation. That is why, if you're going to sell a single-family property, you're going to use a market approach to value. You're not going to sell a property at $110,000 if the properties are selling for $300,000. That would be bad business. Just because an income or just because an approach to value comes up with a particular value, that does that mean that that is correct or apt for that particular property in question?
So you're asking us to reconfirm our value from last year?
Yes, sir.
I have a question about the financial. You have a management fee for 5%. Is that paid to you personally or to an actual management company?
Oh, that's what we pay to ourselves. An actual management company usually charges 10%.
Okay.
Closer
and-
to Mike, please.
And the taxes, are those your actual property taxes?
Yes, I believe they are.
Okay.
To rebut something that was said by the city, it is true that a single-family house will generate more income, more value than an income-producing property. And a bank, when it values to give a loan, will not loan any more money than what the property will support with a 1.25 to 1.3 debt coverage ratio. So to the bank, those are the people that we, who are in the income-producing business, have to be responsive to. We borrow more money than what it is that the building will support, then we have to come up with money on a monthly basis in order to support that mortgage. That's economically infeasible, and the banks would be imprudent if they loaned that money.
Do you take out this 5% and pay it to yourself, or is
Yep.
this?
Yes, ma'am.
Okay. I would just say that because you still have to pay tax on that money. That's not tax-free money. You pay it as income, so it's still income from this property. But you're managing it yourself, but unless you have an actual company or something.
We manage property. This is one of the things that we do.
What's the name of the company?
MLB Mortgage and Investment.
Okay, so you pay it to another corporation?
Yes, ma'am.
Okay.
Yes, and I just want to reconfirm that Laurel Street is a double house, not a single.
Is it what?
It's a two-family, it's a double.
This property's a double.
Yes, sir.
Yeah.
Mr. Chairman.
Yeah. Do you have a question?
Yeah.
Yeah, okay.
First of all, I apologize for being late.
It happens.
When I came in, you stated that my colleague asked you a question. He said, did you think the property would be valued? He asked you about the land and the value of the land. And he said, did you agree with the 127,600?
I think I'm sorry, I think if I understood
Yeah.
correctly, what I responded to was the property, this is the income it produces, and it will only support a certain amount of debt. And that is how it is that the banks use to determine income-producing property. If they give me more based upon other factors, like a lot of land that might be sold to a single-family builder who will build a home for himself, where they take into consideration his income and not the income of the property, they can get a higher price for it. This is what the income is produced by the property, and most appraisers, commercial appraisers, use the capitalization method in order to determine the value. I haven't found it to be any different with any bank that I've been dealing with in the last 40 or 50 years.
Okay, then what would you like us to adjust the total value?
In the same way that I put the value For Saraparu Street, at what the income value was, I'd like to use the same income value for Laurel Street. What I suggested was, setting aside the fact that the actual vacancy was 25%, we could use a more, what we may more consider to be a normal vacancy of 10% would equal a value of $110,282.44.
If I may, usually a commercial appraiser is going to use an income approach to value on a commercial property, as i.e. apartment complex, a restaurant, an office dwelling. Normally, a single family or double family, either way, that's a residential property. You may be renting it out, but it's not a commercial venture. It's not a commercial property. It is a residence that is being rented out to someone. We don't consider single-family or double-family properties to be a commercial property that would be done as a commercial appraisal using a net operating income to calculate the value. Usually you won't get a general appraiser, which is someone who does commercial appraisals to do an appraisal on this particular property. You would get a residential appraiser. And as far as my experience in the appraisal business.
To rebut his answer, the IRS considers this income property, and that's the reason that I bought it, was for the income. If a commercial appraiser put a higher value on it than could be supported by the debt, he wouldn't be working for the bank very long.
Mr. Brown, I mean, I really, I challenge you on the value that you're saying it's worth $110,000. I feel that's extremely too low. If the house sit there, the duplex sit there vacant for a year, you had no income, using your line of argument, the house would be worth zero. I find that real hard to believe.
Well, sir, I think if you take a look at what I presented for information and figures, I used a 10% vacancy factor when the actual vacancy was 25% because I felt that was way too low.
But just the land value alone, I think it's over 100,000. Sorry?
Hold the microphone closer.
My market approach on the land is 127,600.
The land doesn't produce any income. The building on the land produces the
You
income.
can't have income if you don't have the lot.
It doesn't produce more income.
Well, I mean,
So you
That's
can't
not the
borrow
argument.
money on it, and a true commercial appraiser.
I would
wouldn't
typically
put their-
prefer the income approach, but I just have some problems with these expenses. And it may be your expenses, but typically in using valuations, I don't think we're gonna include self-management fees. I don't know what this equipment rental is. We also have wages. You know, there's some things that we typically don't see, and it's really kind of exceeding the threshold that we normally use as a percentage of rent. So, I mean, that's my thoughts. I don't know if this is reliable.
These are the actual figures that were reported to the IRS.
Mr. Bolton, you want to tell us about your appraisal?
I did, I valued mine on the income approach. I used the GRM. I used four different properties within the area, close by, and used their rent and determined what the GRM of 140. And I got the actual rent is $22,002 and 140 is 308,280. I rounded that to 308. That was my valuation. I don't know how.
That was your income approach valuation?
That's my income approach, yes, sir. My market approach was like 345. So we just used the income. I don't know how Mr. Brown wants us to use capitalization. Nobody in the market, in this market that I know of, on a single family or a double uses the income capitalization rate. It's just too cumbersome and requires too much data for most people to provide. It may say that in a court case somewhere, but I doubt that's the rule of.
I believe that court case was in South Carolina.
Yeah, it's not from here.
All right. we have a motion?
I'm prepared to make a motion if there's no other questions. On docket number 17-22176-044, I'm going to uphold my motion is uphold the parish board of review. It's setting the land at $127,600, improvements at $182,400 for a total value of $310,000.
I'd second that.
Commissioner Vercher?
Yes.
Commissioner Wagstaff?
Yes.
Commissioner Wood?
Yes.
Commissioner West?
Yes.
And Chairman Shahardy?
Yes. All right. Just give us a moment. All right, next appeal is the appeal of JAS LLC versus Orleans Parish Board of Review, docket number 17-22177-026. Mr. Brown?
Yes. 7604 Ferret, capitalized value is $152,183. This would represent a $35,000 increase, 30% over the 2015 value. The assessor's value of 310 would equal an increase of 164.83%. Again, these are the capitalized figures for the property. So it would show a value of $152,183. You all found the capitalized value for Serapa Roof Street. Look at the difference between these gross rent multipliers. It goes from $100 to $140.
This is a single-family residence.
It's being used as income producing
It's a
property.
single-family
If it has the
residence.
feathers, if it walks like a duck, if it has webbed feet, it's a duck. This is used as income producing property.
It's a single-family residence.
The bank won't loan me any more money on it than what it'll support in debt. That is an
We're not talking
indication
about
of
what the
value.
bank will loan you, we're talking about the market value.
Okay, let's let Mr. Brown make his presentation and,
Yes, sir, I'm done.
sorry.
Thank you.
Okay.
I am done. Thank you
Okay.
very much, sir. I appreciate the
No,
opportunity.
no problem. Alvarez?
The assessor's office would ask that the commission uphold the value that they placed on the property from last year. We don't feel that an income approach to value based on the net operating income capitalization is appropriate for a single-family residence. And we feel that it'd be more accurate description of market value if the commission would uphold its ruling from last year.
And that amount is $310,000?
Yes, sir.
And the Board of Review had it at 300,000, is
Um,
that correct?
I'm not
Yes.
familiar
Yes.
with that. Is that the case?
Yes, they had.
Okay,
had
then
it at
yes.
300,000.
Yeah, in our briefing sheet, it says that we appraised the property last year, previously at 300,000. Last year's decision, unless I'm reading it wrong, was 310,000. The last time we heard this. It's 310, so the number's 310. But I'm not going to argue over 300 or 310. So, forget where I am.
I did it at
Mr. Bolt.
300, I appraised it at 300,000.
300?
Yes, sir.
You appraised it at
Last year.
300, and the board of review
Yeah.
number was 310, we upheld board of review.
It was
Right.
310.
Right.
Yeah, okay, that's
Your
what
appraisal
happened.
stayed the same.
Yes, my appraisal was not changed.
Right. Your appraisal's 300.
Yes, sir.
Okay. Any questions?
Yes. I would move on docket 1722177-026, that we uphold the parish board of review value, set land at $148,800, improvement value at $151,200, for a total value of $300,000.
I'd second that.
Commissioner Vercher?
Yes.
Commissioner Waggesback?
Yes.
Commissioner Wood?
Yeah.
Commissioner West?
Yes.
And Chairman Shahart?
Yes. All right, thank you all very much.
Thank you.
You.
All right, the next matter on the appeal docket is the appeal of Assessor Errol Williams versus the Orleans Parish Board of Review, docket number 17-22173-015. This is the Mishu B1 Commerce Center. I'm correct on that? Let me ask, first off, I'm looking at photographs of this property, and no disrespect to the owners, but it does not appear to be in very good condition. I know one of these appeals, the city had chimed in, and I don't recall if it's this one or the next one, that the property really should be torn down. Looks like it's in pretty devastated condition. Why are we here? Is there something about this property we don't know about?
My apologies, sorry, Commissioner.
What's that?
I'm sorry.
Okay, no, I'm just wondering what the basis, why the assessor's office is valuing the property, the improvements at what, $2.3 million plus, when the property appears to need to at least be borderline on being torn down, demolished.
Sure. The building is in extreme disrepair. I believe it was hit by a tornado, and there's a letter from the city that says that the building is...
So what are we appealing today then?
Just bear with me. I'm handling these commercial properties for
Okay.
a colleague. It's my understanding in conversations with Mr. Sandos that we're not disagreeing with the overall value. The thing that we, and I conveyed to the CFO of the company during the board review, is that there's a building there. It's not a vacant lot. So our argument is that there should be some kind of a placeholder value, $1, $10, $100. We can't put it at zero when there's something there. So we're not disagreeing that the overall value should be lower than where we're at.
Okay.
Because
If he raises your assessment on the building from $0 to $100, you're really not going to complain about that, right?
Can you do the other building? No.
Well, we got another appeal, which is the same thing. I don't know if that's you guys or not.
Double down on that.
But, I mean, again,
I mean,
I'm not saying I was doing it right.
yes.
But I mean, when I had a situation like this, I would always put, when I was in the assessor's office, I put $100 on, well, depending on what it was. I'd put $100 on it just like as a number so that we know there's a building there. Even though it's, no disrespect, not much of a building.
Tornado did a lot of.
Yeah, yeah. You know, that at least we know there's a building there.
And I don't want to misspeak, but when I conveyed that to the gentleman during the board review, we were kind of in an agreement, and then the board review appraiser zeroed out the building, and that's our disagreement, is that there's something there, so there should be something, whether it's
All
a
right,
small
well, let me
amount
ask
of
you this,
value.
if somebody up here were to make the motion to value the property at the land value that's listed, put the improvements at $100 for a total value of whatever that is, everybody in agreement with that?
Yes, we wouldn't have a
You folks okay with that? I hate to
La-
leave you out of this
land-
discussion.
Land value being 398,000?
100,
Okay.
and then $100 on the building, which would make the overall value $398,200.
Of course, staff has a different land value, I think,
Do
in
you?
its appraisal.
All
I don't
right,
know if y'all
let's-
want to look at that.
Yeah, we can take a look at that.
think it's 151,000 was the
No.
land value.
No,
I've
it's-
got-
No,
I've
it's
got-
398,100.
I've got this one,
Maybe I'm looking at the wrong one.
yeah. It looks like
I'm
it's
sorry.
consistent. I'm ready to
My
make a
mistake.
motion whenever you're ready, Mr. Chairman.
Yeah, go
Can-
ahead.
Can I just ask
Yeah,
you a question?
sure.
Yeah. Michoud Boulevard, which side of Michoud Boulevard is it?
Industrial canal side.
Industrial Canal side?
What are the plans for the property? In 2000, you purchased it for $2.4 million.
It was
And-
used as warehousing. The tornado destroyed the building, the tenant moved out. We're trying to figure out what to do with the insurance company. We haven't settled with them, but the city says we have to raise the building, I think it's 18 inches. You can't raise a building that's 180,000 square feet. So
Right.
the only thing we think we can do is tear the building down.
Well, you
Excuse me.
can, but you'd have to spend more money than tearing it, tearing it
The
down.
floor load capacity
Yeah,
would be
I understand.
nothing.
Yeah,
So we think we have to tear it down, but the insurance company is being difficult.
I understand.
I'm
Can you state your
sympathetic.
name for the record, please?
My name's Kevin Kelly.
Thank you.
All right. You wanna-
I'm certainly sympathetic to the tornado problem. I had one hit my house dead on and had problems with the insurance company for about a year and a half. I'm ready to make a motion in docket number 17-22173-015. I would move that we set the land value at $398,100, improvements at $100, for a total fair market value of $398,200.
Second.
Commissioner Bercher?
Yes.
Commissioner Wagasback?
Yes.
Commissioner Wood?
Yes.
Commissioner West?
Yes.
And Chairman Shahardi?
Yes. All right. Thank you, folks, on that one.
Thank you.
All right. The next item on the appeal docket, the appeal of Assessor Errol Williams versus the Orleans Parish Board of Review, docket number 17-22173-016, Louisiana Loans Properties LLC. Yeah, come on up. Is this the same kind of situation you guys
Yes.
just discussed?
Same situation, is being demo at the moment.
Okay.
So,
And I'm assuming your issue is that the Board of Review zeroed out the improvements?
Yes. We also, that's pretty much the situation. The Board of Review zeroed out the improvements.
Okay.
It is being demoed as we speak. I have a photograph, June 13th, 2018. So we feel that because there was something there for most of the year, there should be some kind of a value, nominal placeholder value for it. The way Orleans Parish works is that the status as it was August 1 sets the value for the following year, since we prepay at the beginning of the year instead of the end of the year. So the assessor feels that it would set a bad precedent to zero out a building completely when something was there for majority of the year.
And do y'all hold that even if something catastrophic happens and the building was washed away, you would still,
There should be at least some prorated value for something there because it was there as of August 1. That's the position of the assessor. So
What
yes,
was the condition of the property on August 1 of 2017?
it was in poor condition. It had been hit by a tornado. We're not disputing that. We just don't feel that it
So
should be
are you,
zeroed out.
are you saying that you want some sort of nominal assessment on the improvements?
Yes.
Again, the solution to the previous appeal was to put $100 on the improvements, just so that we know, so that the assessor's office knows that there's something there. Is that okay with you?
I'm fine with that.
You're fine with that? So both parties would agree that if a motion is made to put the land at the established value and the improvements at $100, both sides are in agreement on that.
Yes.
Yes.
Is that correct? Okay. Well, am I supposing there might be a motion to that effect? Anybody in particular? Or?
Okay.
Okay.
Docket number 17-22173-016, 016. I'd like to make a motion that we maintain the land value at $151,000 and put a price tag of $100 on improvements, bringing the total value of $151,100.
I'd second that.
Commissioner Archer?
Yes.
Commissioner Wagasback?
Yes.
Commissioner Wood?
Yes.
Commissioner West?
Yes.
And Chairman Shahardy?
Yes. Thank you.
Thank you.
Thank you, Mr. Tran. All right. Next matter on the docket is the appeal of 731 Chapatulas condominiums versus the Orleans Parish Board of Review, docket number 17-22171-012. Just pull up a chair in front of the microphone, it'll be fine.
Good morning.
Good morning. This is a taxpayer appeal, so we'll ask the taxpayer to go first. Mr. Quinn, state your name for the record, just so we know in the record who's talking.
Official name is Francis Patrick Quinn III,
Okay.
but I go by Patrick.
All right, so please go ahead and tell us about this property.
Okay. This property was a three-story warehouse empty on Chapatulas in Notre Dame that when we purchased it. In 2004, we started building condominiums on the upper floors, and there was one space on the ground floor that was designated as retail. All the condominiums were sold, and so the only thing left was this one piece of space on the ground floor. The gentleman that did the appraisal for the state measured it at 29 something. We had it at 3,000. We're within a few feet of that. The issue is, as you can see, there's a P&L that I included, and our rent is about $3,100 a month. You look at our expenses, they have a vacancy factor of 5%, which I appreciate them giving me that. And then we pay the taxes, which is about $10,000 right now. We also pay the condo fee, which is like $8,400. And so when we're finished, our income is about $12,000 a year. I'm sorry, I thought I had the exact number, but I can come really close. That's your numbers or mine?
No, that's your numbers.
Oh, thank you. You want to do my presentation?
Sure, why not?
All right, so the last page of Exhibit 3 is the numbers. So we have rent of $40,010, condo fee of $85, depreciation $31, office professional fees $5,000, that's for accounting and legal, and property taxes is $10. So the owners of 407 Notre Dame net $12,158 from this property. Yet the city and the state have it at a much higher number. Here it is. The city has it at $58,800 for the land and $391,200 for a total of $450. And I think the appraiser for the state came up with a very similar number. So what we're arguing is as someone said earlier, if I went to the bank and said, we're making, whatever he told me, we're making $12,000 a year, but this property is worth $450, we'd like to make a loan for 400,000 or 360, he'd say, you're crazy. You're only taking in $12,000 a month, a year. You're taking in $12,000 a year. And so I feel like based on the numbers, I mean, these aren't guesstimates. This is the numbers. This is the real numbers that the property, based on the income approach, which the state appraiser said was the best way to do it, it's worth much less than $450. So basically, what the appraiser for the state did is he said that you should be getting more rent, and maybe he said you shouldn't be paying as much expenses. We would like to get more rent, but we have a lease, and it's got like 50 years left on it. And we'd like to have less expenses, and we actually have cut some expenses because we're paying a manager.
How many years left on the lease?
Probably 55 now.
And is this to somebody who's related in any way to the company?
Yes.
There's two people that are the lessees. One of them has they do both have a small interest in the LLC that owns the building. But for instance, like my company owns 50% of the project, and we're not sharing anything from that bar and restaurant that's in there. And I'm actually speaking for another 20% of the people that own the LLC. So like 70% of the people that own the LLC are getting $12,000 a year. The people who own the bar and restaurant, I think together they might own like 17%, 18%. And so
They're getting a benefit of reduced rent below market rates?
that's probably true, but also they started with a white box. They started with actually it was worse than that. They had to tear out what was there, and they had to spend several $100,000 to create the bar and restaurant. And so, once again, if you take the city's numbers and you take what they have, plus what the bar is paying for for personal property, you come out with the same number as the state. We're not really arguing that total number. What we're saying is it shouldn't be on the building. It should be on the leasehold improvement. I mean, we're getting what we're getting, and the fact that there was a related party is unfortunate, but all it did was move the value from this LLC that's appealing to the LLC who now has the bar. And I feel at the very least it should be flip-flopped where they're rated at about 130,000 and we're at 450. I think if you flip-flop those two, that would be a fair and appropriate number.
All the improvements made to the bar were done by the lessees?
Every bit, yes.
Did they report that as leasehold improvements?
No, they didn't. The city, I went to the city last year and talked to Lenise, I'm saying it right?
Mhm.
And she said they had never filed a personal property tax return. So they've been in business since like 2010 and never filed a return. So I think she filed one for them, if I'm correct. You may know better than me. But I think she just estimated one for them this year. Maybe Russell can explain.
Yeah.
I'm
Well, I
guessing
mean, here's the
what-
dilemma we're in. The appeal before us is for the real property and the
Correct.
value put on by the assessor's office.
Yes, sir.
And the value put on by the assessor's office certainly appears to be based on the best information the assessor's office had at the time
Yes.
of assessing the property. But it does sound like it should be leasehold improvements.
Well, the,
And I don't know how we can get around that.
overall construction was done in 2010. I have the information, it was done by, where is it at here? Trying to get the name of the person applying for the
Right,
permit.
Mike Bach, maybe?
Yeah,
Or
Mike
Michael-
Bach
Or
Senior.
Michael Spring.
The issue is that any of the leasehold improvements, even if it would be put on the personal property roll, they've never filed a personal property rendition with our office.
But you could still put it on.
We can, but they're,
I
right
mean,
now,
we
we've.
have people all the time that don't file their personal
Yeah.
property reports that you still would have to put on the tax roll.
Correct, but our office feels that the real estate is where the property should be at because it's the more accurate reflector of that value, of the 450, because
But the problem is, and this is a problem we have, and I don't know how we're gonna deal with it, but the problem is, the owner of the real estate
Mhm.
is not the owner of the leasehold improvements.
Okay.
I mean, look,
It's
all
a
the
build-out,
time,
is what you're
look,
saying.
all the time in Louisiana, you have property that's rented out to an individual,
Mhm.
land lease. The owner of that land lease has rented the property to another person to construct a building and do whatever. As a matter of course, we assess the land and the building on one tax bill, real
Okay.
property. You do it, I did it, okay? The reality is, if I'm the landlord of the land, I really don't own that building, you know? So, I don't know how we straighten this out, other than to say that, the owner of the leasehold improvements, or the person who did the leasehold improvements, and I'm assuming, Mr. Quinn, you're not
No, sir.
depreciating
I
the
have
improvements?
no connection to that whatsoever.
No, what I'm saying, you're not, your company is
It-
not depreciating
Oh, no, we're not.
Yeah, okay.
No, no.
So you've got to, I mean, again, I hate assuming, but don't like to assume, but I'm going to assume that the bar owner is the one depreciating the improvements that they made to that space.
I'd like, if I can say, it doesn't seem fair to me that because they went outside of the scope of the law and didn't file a personal property return, they should be rewarded for not following the rules. It's like we're giving them a break because they didn't file one.
Well, we're not rewarding them. We actually filed the last time that they filed a rendition in 2015, and then we've used the depreciation schedule and we've fixed them with penalties as a part of the valuation process for personal property.
Did you
So
add the leasehold improvements to it?
We did not.
That's the problem.
But we're not, I mean, we're not gonna know that it's.
No, I understand you didn't know it at the time. That's why I
Yeah.
said earlier, you made you put the value on the best information that you had at the time.
Any idea the value of the improvements that were made?
I was told by Mike Bach, the gentleman that did it, he spent over $400,000. Now, I don't know if that includes his equipment, his chairs. It probably includes everything. And he may be exaggerating a little bit, but I think maybe $350,000 to $400,000 is probably about what they spent. And
He listed 48,000 on his permit, so.
but he's probably just counting the chairs and tables. He's probably not counting what he put into to build the structure, and the air conditioning and the.
Well, they may be
plumbing.
leasing
No,
the
he's saying,
tables.
he's saying on
He's
his
saying the
construction permit.
Was $48,000.
On a construction permit?
Yes.
Well, if you took a look at it, 3,000 square feet of a brand-new bar and restaurant. I think-
$16 a foot?
Yeah, that's about right. So it's obvious that number is low. And I've made this argument, I went to the church on Veterans and met with, I think, Mr. Levine.
Yes.
And I made this argument, and then he listened to me and he said, well, we'll think about it. And then I talked to him about a week ago, and I really got the feeling he finally kind of understood what I was saying. And I thought that he was going to come here today and say, we agree. That's the impression I got with him when I left, that he was going to agree to move the value from, not all the value, but the appropriate value from us to them. And-
Agree to move what to what? Give me some numbers.
Okay, like our income is $12,000 a year, so let's say the cap rate of 10, so 120, let's say 130,000 to us, 130,000 to us. Our building right now is at 450. He spent 400 approximately to renovate, to build it. So I would suggest maybe you go to 400 or 450 for him, and then it really washes out.
But the lease, though, I mean, Yes, you're locked into a disadvantaged lease, but the lease is between related parties. Their members and the member manager is the same for both LLCs. So it's it's not a valid lease, in my opinion.
I wanted to ask that question. You asked that question for a reason. What is is it an accounting principle?
No, I was just asking about the related parties and what control, because you might have control over that lease amount. If they had controlling interest in that, it doesn't sound like they do. However, you're not giving us any basis of what these improvements are. Are y'all planning on putting that on the tax rolls, or are y'all going after?
I'm not really sure. I haven't spoken to the personal property, other than to find out that they've never been a rendition
But
filed.
you imagine they would, since it's kind of popped up now.
Yes.
Well, and you're exactly right. There was probably, it's less than 20% of the parties that are involved with the bar are involved with the big group. So they're taking advantage of the big, in a way, they've made a really good deal for themselves, and they've hurt the big group. I'm here representing the big group.
Well, I'm
They
sorry.
should make their own argument.
You've got depreciation expense as part of your expenses
I
that you
do.
get to your 12,000. You can't exactly take depreciation as an expense and get to that number, from what I understand, because you've got appreciating property and you're depreciating it. You usually don't add that number in when you're coming up
Okay.
with these numbers.
I think the appraiser, I think the state or the guy put that in when he was doing it. But I understand your point. If all we have is the walls and the concrete floor, it's not much to depreciate, you know.
Well, even
Yeah.
if you are, it's still appreciating normally, so you don't, I mean, you're expensing something you've already paid.
Yeah.
That's kind of a double dip.
Well, yeah, if I bought a whole building and it appreciated every year, I would still depreciate it because the tax
Yes,
law
but you
lets
wouldn't
do
take
it.
it when you're figuring out what your return on it is, because.
Okay.
I may have missed part of this discussion, but do you think he's getting about a 20% discount on the rent because they have an interest of 18% or
No.
so? No?
They own about 18 to 20%, and they're getting it's probably half of what it should be. It's basically $1 a square foot a month, and the appraiser for the state and the appraiser for the city, and they actually had an appraisal done too, and all three appraisers came up with the same answer.
Does it
that the
ever
value-
go up, or does it stay exactly the
I
same?
think it's $100 every 5
rent
years.
goes up, no, $100
per month.
yeah, for the first
Or per-
9, 10 years, didn't go up. I'm so thirsty, I'm sorry. Then it goes up $100 a month every 5 years, or something like that.
Okay, well, this is just my opinion, but I don't know that it's the taxpayer's burden if you make a bad deal and you've got rental income property that somebody's gotten a favored status that also owns part of this company. I have a hard time wrapping my head around it, where bad judgment on the taxpayer's part
Well-
should be the other taxpayer's problem.
I understand that, and I agree with you. I think what I'm saying is, I'm not asking the taxpayer to lose a penny. I'm just saying move it from column A to column B. That's, just realign that adjustment of where that 500,000, I'm sorry, Russell, is it 550? 450. I'm just saying the 450 should be, a big chunk of that should be moved, because the appraisal itself says the building's been devalued because of that lease. And the lease now has the value, the leaseholders actually have the value of the, they've.
And where are we getting the $450,000? Do we
That
have some
was-
documentation for that?
That was the city's number.
That was our current value for the property, $450,000 for the unit.
That's what so do we know what the leasehold improvements or the value that?
We think it was about 400,000 that they spent. That's what I was told. It wasn't under oath or anything, but that's what he told me. And if you think about 3,000 square feet, the commercial renovation, I think Mr. Hardy would know, $150 a foot, you'd be lucky probably if you do it for that. That's 450. If you did it for 100, you'd really be a miracle worker. That'd be 300,000. And then you add the furniture and the other miscellaneous stuff, kitchen equipment. It's expensive to build a restaurant. And they skirted the rules. They didn't send in a report for many, many years. I think the only reason that Lenise did that report is because I brought it to her attention, and then she contacted them, and then she got them to do it, I believe. But it's just, they have done a good job of moving the value from our column to their column, and I just think that the taxes should be appropriate. Like I said, I'm not asking the city to lose any money, or the taxpayer. I just like to see the value moved. We should pay what the building is worth right now to us the next 50 years, or 55 years, and they should pay the value that they're getting, which is the leasehold improvements and the going business.
So what exactly is your request? Is your request for a total valuation, as on our sheet, 308,800, or?
No, sir, I was hoping ours would be the 130,000, because we have $12,000 a year income. And right now, they're paying based on 130,000. Am I correct with that?
No, they're paying at 100.
Your income approach is not, I mean, there's things in here I guess I would question. The condo fees, is that associated just with that one particular space, or is that the
Yes.
whole building?
No, that's the
That's
condo
all?
fee, that
For that one particular space?
That part has to
Okay.
pay. It sounds like a lot, but it's $700 a month.
Okay.
You know,
Yeah, I know,
it sounds like a whole lot, but it's $700 a month.
Professional fees of 5,000, what does that
And
entail?
that's the CPA at the end of the year, and
So you have audited financial statements?
Wegman does that, is the accountant that does it. I've asked for and not received 16 and 17 yet, not from Wegman does that, from the two guys that own the bar.
Typically, your accounting fees are not gonna be 5,000 on.
No, that's a little
passive
high.
income.
That's a little high. There may have been
That's
some
what I'm trying
legal
to figure out,
expense.
is this taking care of other expenses associated with either other
No, this-
properties or the
all-
entire condo
All
regime?
these have to do with just this one piece of property. The legal fees are usually not that high. There's probably, legal and accounting is usually around 2,000. But there's no management fee here at all, and there used to be a management fee, but I talked them into stopping that at least. But the other
And the
expenses
property
are
taxes are paid 100% by
about my
the
group.
landlord, and the tenant pays no property tax.
Right. Right. That's right.
Have you provided the audited financial statements to our office?
I think
I don't-
I did, but
I don't have
the
a
last one I
recollection of
have
that
is
happening.
215 that's audited.
Okay.
I mean, I've asked them a couple of times to provide it, but these numbers, I mean, we know what the rent is. Even if you knock the expenses in half, it's still,
Sure.
you
No,
know.
I'm just asking.
Yeah, the income
'cause-
is so, the income is the income. And, like I said, if you didn't like the 5,000, you change it to 1,000, or if you change, the condo fee you can't change. It only goes up. And so the only thing that you really could change is what the taxes, not the taxes, well, the taxes will go down, if y'all agree with me. But the legal fees, I wouldn't mind if you cut that 2,000, legal and accounting, and added 3,000 to the income, and base it on that. That's reasonable, I think. But the rest of those expenses, we can't do anything about. The rent is the rent, and the expenses, the condo fee is what it is, the taxes are what they are. And I have trouble reading myself. Depreciation was 3,000.
But you do admit that the lease is a lower lease and that it is between related parties.
You could say that. But the 80% of the people who belong to this LLC are getting not one penny of value.
Sure, no, I understand. but-
And the people that did the lease for themselves have moved the value from us to them.
But in
Now they have-
situations where you have questions on the lease, would it not be more apt to use a market, a pro forma approach to the valuation for the income value as what the market will bear, I understand there was a restriction because it's a low lease, but it is between related
Well,
individuals.
Let me just say, look, my observation is the lease is a sweetheart deal. To me, that's not the problem.
Yeah.
Lease could be $9,000 a month. That's not the problem. The problem is leasehold improvements.
Sure.
That is being attached to the property, when in reality, it should be taxed to the tenant,
Okay.
the lessee. That's where the problem is, and of course, we have no vehicle up here to be able to address that. You know, I don't think we have a vehicle to do that. So let's hear from Mr. Wallace about his appraisal. And my question is, the $30 a foot that you used for the income approach,
Right.
is that $30 representative of move-in property? In other words, all the assets are there, for an office or a restaurant or commercial property?
Not personal property.
Not
like,
personal, I understand
right,
that.
But move in and then they would probably go in and finish
Do
it out.
some adjustments or whatever.
Right.
So, so that $30 a foot would include, or would not include such things as leasehold improvements. And I don't mean minor expenses, I'm talking about
Right.
major renovation.
Not major.
Or if I walk into this space to lease it,
Right.
and it's,
It
A
would
shelf,
include
a
like
shelf.
building a bar.
There's nothing
bar,
in there.
A shelf.
Kitchen equipment, things like
There's
that.
nothing in
It would
there.
be more like paint, general,
Right,
move in.
right.
HVAC,
But I'm
right.
saying, if the space is empty, 4,000 square, whatever the square footage is, 3,000 square feet, I walk in there,
Right,
all I see is four walls.
right. Based on.
Is that what the $30 represents, or does it represent more than that?
Like a finished
That-
out property.
That's what it represents.
It represents,
It represents it's not finished out as a bar the way it is. It represents you walk in, it's for the space. That's for the space. And then the leasehold improvements would come like these guys did. They went in, they put a bar and they put kitchen equipment or whatever other specialty.
so if the landlord,
goods and-
so what you're saying is if the landlord had done all of that, the rent may not be $30 a foot, it might be $40 a foot.
Maybe so. Maybe so.
Before we, I'd like to ask the taxpayer
Sure.
one
Sure.
other question. In item 22 of the lease, when it talks about taxes,
Okay.
it's kind of unusual. Lessor agrees to pay the taxes and present to lessee the receipt of the payment of the taxes.
Right.
And there's no reimbursement?
No reimbursement at all.
Then why do you have to pay them, why do you have to give them a receipt showing?
I guess I'm
Supposed to make sure they
assuming,
paid?
well, his lawyer wrote the lease, just to make sure they don't rent a building that could be go to tax sale. There's no
Or
reimbursement.
that all the leasehold improvements are included as one. I don't know. I just think that's odd. I mean,
The lease, I hate for y'all to get into, I guess, our
that
business,
language
but-
is generally reversed if it's a triple net lease.
Right, but it's not a triple net,
I know.
it's the worst case scenario. We're getting a small
Well,
rent,
I
and
guess
we're
he's
paying all the
including-
expenses.
He's also including the state and federal taxes too, so I guess he's just worried about potential liens or being evicted, you know.
Yeah, I'm
I
supposing
think so,
what he
but
wants
there's
to
no
make sure-
reimbursement.
wants to make
Positive, no
sure the taxes
reimbursement.
are paid.
Now,
It shows he's protecting a pretty valuable.
Got a good lawyer.
Yeah.
Yeah, I mean, it says that the lessee can rent, sublet, or grant use of the property without lessor's permission, and that the leasehold improvements only revert to the lessor upon termination of the lease.
which is, I'll be long gone.
The lease is totally in favor of the lessee, which is highly unusual, bottom line.
Especially when they're
agree.
part of the corporation that owns the
Must be
building.
Shahardy Law Firm.
Yeah.
The-
I wish we could
Unfortunately,
pull something like that off.
unfortunately, the manager of the LLC at the time was the one who negotiated the lease with, he was the tenant and the landlord. He was on both sides at the time. And so they basically transferred the value from us to them. And that's what this gentleman's report said, that's what their own, even these people, even the tenant's appraisal said the same thing. What's left for us is almost no value. What's left for, they now have the value, they have the value now.
Did
Because
y'all
they-
have an attorney when you signed this lease, or just?
No, ma'am. No. it's,
It just kind of puts us in a pickle. It puts us in a, it's hard for us to effectively cost the city revenues or reduce the assessor when it's really just clearly just a bad business deal or a favorable business deal for partner reasons. I don't know.
right. But
So-
as I said, I'm really not asking that the city lose money. I just think if they paid their fair share of what they should pay for personal
So-
property tax, then
I understand.
mine could be
Yeah,
lowered.
I understand. Well, it may be something they can fix going forward into next year.
Well, I don't know how this is gonna come out, but I'm gonna ask as a personal favor, if you all, if the assessor's office would go back and take a look at leasehold improvements and see if there's any kind of adjustments that can be made. I mean, there's no teeth in this, it's just a request.
Yeah.
That, you know, that if there's a way in which the assessor's office would be comfortable with assigning a leasehold improvement value to the tenant, I mean, I think that's would be the equitable thing to do, you know.
I'm just
on
not
that.
sure how that would work for a prior year.
You know, if we
Change
don't-
orders are amazing animals.
Well, y'all didn't appeal your prior years, right?
No, we have this first time.
Okay.
No, well, yeah, I mean, you can only deal with what you got before you, so I'd be talking about, I'm not asking you to go back 7 years.
No, I mean.
The only thing you got right now before you is this.
Obviously,
Yeah,
you're gonna go
I'm
back to
talking
the
about
personal property.
Well, I'm talking about 18 for personal property, because they didn't appeal, and I don't know how, whether or not.
Well, people come in, I think people come in all the time, and you all take a look at whatever they say is wrong and fix it. I mean, we get change orders all the time
Sure.
from the assessor's office, 64 offices around the state, including Orleans. So I think it's something that can be addressed if the assessor's office wishes to address it. The problem is that this commission, we don't have a vehicle in front of us or a way in which we can do that. I mean, we can't, I don't think we can legally create an assessment
We don't even
out
know
of
what the
thin air.
amount would be.
What's that?
We wouldn't even know
Well, we
what
don't
the
know what the
amount
number
would
is.
be.
Yeah, we don't even know what the number is. So,
We can revisit that in our office, personal
Yeah.
property department and applicable people.
ask them to take a look at, again, this has no teeth in it, I'm just asking.
Sure.
To address this issue of the leasehold improvements on this property for the year for this year that's under appeal, and also for, for the current year coming up and
Okay.
into the future. Again, no teeth in it, it's just me asking, if you can take a look at it.
Sure, I'll take a look at it. I just
Yeah.
need to
And
confer
see
with
if
the
there's some-
appropriate people.
Yeah,
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 and-
you have to talk to the assessor, and I
Yeah.
understand that.
I appreciate that, and honestly, I thought we had agreed to that. before
Well,
we
the
came
problem,
today. I
look,
thought
you
we
all
had-
can agree to it, you guys can agree. We don't have a way to do that, we do not have a way
So,
to say,
so I guess I'm asking you just to value my interest
Bust it down.
at what it's worth.
well, yeah,
What's this at that?
I mean,
It's at that.
I don't know yet what we're doing. Mr. Wallace, I
show that to-
asked you to speak, and then I took over, so
No, that's fine.
let me let you
Thank
speak.
All right, I appraised the subject property on April 5th of 2018. The uncontested land value was supported based on vacant comparables at $58,800. I also did a market approach to value and came up with $580,000, which would be $521,000 to the improvements and $58,800 to the land. And also did an income approach to value and came up with $563,000. I correlated both values together for a final value of $570,000.
Thank you.
And again, your price per square foot is exclusive of your typical improvements that were made at this location?
From the sales that I have, yeah.
Could-
There may be, I mean,
Could you
they
justify,
vary, but
could you picture this empty space and justify maybe a lower range of $25 a foot? You said it's 25 to 35 in that area. I don't know, due to the age or certain.
yeah, I mean, 25 to 35, It kind of depends on what street. I mean, you can go
Yeah.
around a corner and it may go up a little bit.
But 25
for the
could be,
range-
could be
I
acceptable.
mean, 25 to 35 is the range.
And I think every property in that area, they're all old buildings, have been there 200 years. They're all gonna be different. One of them might have been a retail store, one of them might have been a bar, one of them might have been an art gallery. They're all different, and I guess every deal's a deal. So I'm sure this gentleman's close. And the numbers that he came up with are pretty much the number that I'm okay with. I'm just not okay with paying 90% of it. I think it needs to be moved.
And our tier on the cap rate is, tier 2.
Tier 2. Neighborhood commercials, South Region, 6.5 to 10, average 8.1. I went with the average.
Okay, give me 1 second, please.
May I go to the bathroom very quickly? Chairman?
Sorry?
May I go to the bathroom very quickly?
What's that?
May I go to the bathroom?
Yeah, sure.
I'll go very quick. I'm sorry.
We won't hold you here for that. You're gone too?
Uh-oh.
Mass exit.
Hey, look, while y'all in there, why don't y'all talk about working this out, okay?
All right, Regina, why don't you check my numbers, so.
Let's see
I
what
gotta-
you got.
If I go, if I change this